In today's fast-paced world of energy markets, few topics are as gripping as the twists and turns of global oil prices. On August 19, 2025, traders were left scratching their heads as oil prices took a noticeable dip. Why? Because geopolitical tensions once again found their way into the spotlight, influencing market sentiment in ways that could reshape the global economy. But here's where it gets controversial. What happens if peace talks gain traction, and how might this affect everyday consumers at the gas pump? Let's rewind for a moment. By the close of trading on August 18, West Texas Intermediate, WTI, a key benchmark for U.S. crude oil, had fallen by 1.7%, settling just above $62 per barrel. Meanwhile, Brent crude, the international standard, experienced a more modest decline of 1.2%, closing around $66 per barrel. These shifts came amid growing discussions about a potential ceasefire in Ukraine, a development that could have far-reaching implications for energy markets worldwide. At the heart of these developments is none other than former President Donald Trump, who has reportedly been advocating for high-stakes diplomacy. His push for a summit between Russian President Vladimir Putin and Ukrainian President Volodymyr Zelenskiy signals an attempt to de-escalate long-standing hostilities. While the idea of peace may sound appealing on paper, its practical impact on oil markets is sparking heated debate among analysts. The reason? A successful peace deal could lead to fewer restrictions on Russian crude exports, which have remained surprisingly resilient despite ongoing geopolitical turmoil. Here's something many people overlook. Even during periods of conflict, Russia has managed to keep its oil flowing to global markets. This raises important questions about whether lifting sanctions would truly disrupt current supply chains or merely stabilize them further. For instance, if Russian oil becomes more accessible, could this translate into lower prices for consumers, or would the benefits be offset by other economic factors, such as inflation or currency fluctuations? And this is the part most people miss. While traders focus on immediate price movements, the broader consequences of geopolitical decisions can take months or even years to fully materialize. In the meantime, uncertainty reigns supreme, leaving businesses and households alike bracing for potential changes. So, what do you think? Should we celebrate the prospect of peace, even if it means potentially empowering countries like Russia economically? Or does stability in oil markets outweigh the risks of easing sanctions? Share your thoughts in the comments below. We'd love to hear your perspective.